Hello, 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 hello. How's everybody doing? So I hope everybody's having an awesome weekend wherever you may be. This is 50 pips rocking and rolling here, 8th of February 2015. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take, and the fact you're listening to this means you've read, you understand, you accept. All disclosure disclaimers on the blog, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. So what up, guys? So let's see what's happening. We got interesting week shaping up. I mean, really, the main thing is going to be all the we're going to continue to see wheeling and dealing on crude. What about the geopolitical tensions? Are we going to get something out of the Ukraine which could spook the markets, or vice versa, be positive? We've still got a lot of event risk with Greece. The main event on that's going to be February 11th, midweek. We got that Eurogroup meeting. So again, apart from that, in terms of the data counter, we do have some RBA stuff in the overnight session today. We do have CPIs out of China. We've got manufacturing production out of the UK. Again, we've got all those Eurogroup meetings. We've got unemployment out of Australia. We've got the inflation report out of the UK. We've got retail sales and unemployment claims out of the US. So we do have a bunch of stuff here and there. We got University of Michigan and manufacturing sales out of Canada on Friday. So again, clearly there's some stuff on the calendar, but the data counter is not that action packed. Most of it is going to be possible event risk and to see what comes out of geopolitical tensions, crude and Greece. So heads up for that. Things could stay fairly whippy. Okay, so let's start with some futures. What's going on in terms of the equity side? So on the ES has been moving quite nicely. Actually, it's still stuck in this range, right? And the broader range is basically this whole 2075s into 1975s. And now I haven't been particularly active on the ES except at the extreme. This is a very nice buy. We said as we're chopping inside, we said these levels, 2025, 2050, 2000 are going to be pivotal for action intraday, and they have been respected quite nicely, right? However, the best edge, the bigger edge as far as we're concerned is taking opportunities, shorting failures at extremes, getting long. Look, beautiful little reversal candle here on the 1 hour, on the 4 hour, right at the 1975s for move back up. So again, very choppy, but tricky to make a real call here because we're still consolidating at highs. I think technically, if you're just looking at the most recent action, that whole series of lower highs is simply not on the cards anymore. And you see the way it's holding, it looks like these 2050s are going to try and act as support for a retest of these 2075s. So it doesn't really change going into the week. 2050s pivotal, hold above in early trade. We'd expect to try and see a stab back into the 2075s, hold below, move back into the 2025s. I think technically it looks like it still may need to if it's going to fail, it needs to fail from a bit higher level, but still a lot of chop inside this area. The difference is if you look at something like the NASDAQ, is you see that the NASDAQ is still, broadly speaking, holding a bit heavier, in terms of all this series of lower highs. So we'll have to see how the NASDAQ behaves here. It's still holding this whole series, so still chopping inside this range. But again, similar to the yes, but a bit heavier. I think the thing which is a lot more interesting to us is basically the DAX. And again, this chart's been up on the blog for about 2 weeks now. And what we were talking about was the fact that basically, once we came back and we got an aggressive move here at this 50 back, we moved the 120, we hit the 123 extension and the 150 extension. What happened is we saw that here, so 2 weeks ago, the market was starting to be unable to attract new buyers at highs on approach to this 150 extension of this move here, and we saw basically it's struggling a bit. Then we came in, on the news, non-news, whatever, bam, we took another stab higher. But once again, you see these wicks, it looks like the market is still unable to attract new buyers at highs, right? We'll have to see how the monthly goes. It's still very, very early days for the monthly, but this is something which has caught our attention for the past 2 weeks, the fact that it's struggling to find new buyers at highs. So what I would watch on any kind of weakness is how we behave into this 123 level right here, and this will likely be the bull bear line inside these levels. Remember, these are the big pivotal zones, and right here it could be very choppy, but it looks like it's starting to find a bit of having a bit of trouble attracting new buyers at highs. What's happening in terms of gold? Gold, it's just a lot of wheeling and dealing with the ES. ES catches a bid. and basically gold finds offers, right? Pretty classical action. So what we were looking at here is we're saying, basically these 1250s were pivotal for action, and look at these, as long as we're holding above here, expect those 1300s to come back into play. If we could not hold that 1250 support, then we'd expect that 1219s, 1220s basically to be the next level. As you see, also you've got this moving average starting to come back up. Now this is really going to be the key, right? We could see the ES take another stab higher into those 2075s, and we could see crude pull back all the way into this 50 back zone and this area, which is the low end of the range, because remember the range for us now is 1200, 1250, 1300. And as long as this holds, then the case for gold to continue to move back higher, for the ES to find a healthy correction off those highs, off those 2075s, is still in play, right? If the ES completely breaks through that zone, those upper support, you'd expect a gold to also break down here. For now, we're still fairly constructive on gold. We'll have to see how we go into the year, into the week, but basically the levels really haven't changed. And in terms of, so that's pretty much where we're at there. USD JPY, we talked about the fact that we were stuck inside this broader range and that we felt there were very little edge here. The only thing was basically looking to get short into these highs, looking to get long into these lows for a move back at the mid-range, and this descending trend line was going to be pivotal for Momo and flows here. So right here, I think a lot of people are going to be watching this level. Last week's we kept on saying, that those 118s attract, 118s attract, 118 attract, and basically we're back above 119 now. So look at this going into the week. As long as we hold above these 119s, then I would expect this to try and get some momentum and continue to try and rip back up into those 121s. Keep in mind we're still in this broader chop zone. Again, depending on what happens in terms of geopolitical risk, what happens on the euro, etc., we could come right back down. So right now, I think everybody's looking for this to stay bid, but I think it's very tricky to try and play this inside the range. The edge is going to be at the extremes, but again, also we're really not interested in trying to play against the BOJ. There's a lot of talk of more stimulus to come, so if anything, we've been positioned to the long side, not to the short side, at least not here. What's happening on Aussie, on some of the commodity currency? Oh, by the way, on EJ, EJ is also, keep an eye on EJ. Very interesting zone here, right? Because we've had this big press back down. We talked about this being a really important support, and you see here what's happened. We come back into it and we've broken below, and it just caught a bid and it's right back into it. So keep in mind the bears are going to be looking for this previous support to act as resistance. They're going to look at this to hold, for this to continue to come back down, potentially all the way back into those 120s. Very aggressive move back here to the next moving average. By the way, this is a weekly chart with a 100 and the 200, but I would be very cautious if this catches a bid and this starts to close above above here on any daily level. This could start to rip quite quickly if we make it back up above those 136s. So again, pivotal level, shorts and longs are going to be very interested, but look at closes around this range or this level to give you clues for momentum and flows. Where were we? Some of the commodity currencies. So Aussie, we're right back to, actually let's get a blank chart on this Aussie. What's going on Aussie? So basically we talked about the fact that we expect to see some kind of base forming here. As we came back down, we're right at that 200 on the monthly, right? Really key level. Now keep in mind that as long as we don't make it back above, I think everybody and their hamster is looking at the 0.80, so as long as we don't make it back above there quick, pronto, likely pressure is going to stay on. But right here, it looks like we could see some kind of attempt of a base. Again, it's tricky to do these updates before we open on Sunday because, anything could happen. I'd expect still in classical fashion to try and see Aussie and Kiwi try to take some stab at the downside, maybe some gap downs, continuation of the Friday moves. But clearly, what's more interesting or what's more important to me is here, if you look at what happened, if you go back even on a daily or something like that, right? And basically, remember what happened on everybody was talking about the rate cut, etc., etc. Then we had this very aggressive move back down, right? So we come down about 200 pips, right? and then we rip right back up all the way, and we close the day back above, right? We down about 200, up about 230, and we close above. So no matter what happens, you have to respect these kind of moves. This is a very aggressive reversal after that move down, right? So a lot of people are going to be looking at this as some kind of an intermediate or bottom, right? And you see basically what's happening. We're starting to form some kind of support here. So I'd be very, very careful about trying to get too aggressively bearish at lows here. It looks like it's trying to base, and I think, you know, the big level is as long as we don't take out those lows, we could see some kind of funky basing action. So right here all the way inside this 80 to, you know, 76 20s, we could see a lot of wheeling and dealing inside this range, right? But it looks like it's going to try and base, and the basing action was very, very aggressive, right? So keep in mind, this is going to be interesting. This is all a big support zone, so watch to see what price does inside this area. Very bearish for daily or weekly closes below this zone. Daily closes or weekly closes above this zone, then I would not be surprised to see a bit of a pop, a fairly decent retracement. Keep in mind, you've got a lot of room to the upside to go even before you get into the breakdown zone or before you get back to any kind of 50 back of this move down. So again, I think that if it gets going, there's potential for a bit of a squeeze here, but it's a very interesting zone. And that's fairly similar to what you've got happening on something like Kiwi, right? Very similar. This is a chart we posted on the blog. Again, we said don't be so obsessed about that 100 moving average on the monthly. Keep in mind that you've got a lot of structural support to the left, right? So even though it looked extremely heavy, there's a lot of support. So we definitely not want to get short into the hole, short in front of a brick wall. And you see what's happening here. It's trying to hold, and it's very similar action. You've got, you know, very nice action here. Look at that close on the daily. Bam, took out all stops, back and fill, back up, holding positive. So again, I'd be very cautious here and look at how we trade. But we start getting daily closes back above those 73.60s. You know, I would not be surprised to see that breakdown zone come into play fairly quickly. You know, 76s, you've got that 100 and that moving average up there. So again, this is a lot of basing action, but as long as it holds this base similar to Aussie, you know, we could see a little rip higher. Close below this zone, very, very heavy, okay? And similar action on on CAD, really at highs, and you know, really even instead of looking at the CAD, you can just look at the crude chart, right? We've been talking about this crude, and we've been talking about for weeks that it looked like it was trying to base here. Then unless we start to get daily closes below those 44.30s, we'd expect this to find some basing action. And again, those 47.50s was going to be pivotal. Once we started to break above the 50, we said, do not underestimate the potential for this to continue to stay extremely whippy. But now that we've taken out that 50s, as long as we keep on holding above, those 55s are going to attract. It could get very, very whippy, but those 55s are going to attract. And you see what's happened here on this rip back up. It comes back down, and the pivotal level that those 47.50s hold. And here it just looks like it's trying to move all the way back up, right? Trying to move and catch another extension higher. So again, look at this 50 mark for pivotal levels into the week. As long as we hold above 50, and again, a lot of people will be, I think, underestimating, you know, the kind of moves we've seen on crude. We've had very, very aggressive moves. I mean, it's been years since we've seen this kind of aggressive rally off lows, right? So you have to respect this, and seeing the way the market's positioned, you know, this doesn't have to pop back up to 100, right? But you can see that even staying in clearly pressure on at lows, you can have very, very big moves, and it's just the market trying to behave a bit more healthy, you know, a bit more of a healthy manner than the way it's been behaving, right? That's all. So right here, we're still looking for those 55s to attract going into a week. So again, what else have we done? Oh, okay, we haven't done, I was going to forget, we haven't done euro on cable. What's going on cable? Cable, we talked about the fact that, you know, a lot of people were getting excited about the 150 psychological level, and were calling for the death of pound, whatever, once we broke below the 150. And, you know, what we were saying is just look to the left of this chart, on the weekly, there's massive structural levels from those 148s into those 150s, massive support. So, unless we really start to close below the 148, you don't want to get short into, well, we don't like getting short start in front of a brick wall, especially once we've had pretty much a one-way train, even in that most recent move, 700 to 800 pips of the downside without any kind of retracement, right? So now it's holding that mid-range, that low range. As long as that low range holds, we'd expect it to try and take a step back into back into those two moving averages on the weekly. If you look at it even on the 4-hour, right, we saw very nice action, right? We're coming into these 150s, and again, just market repeatedly telling whoever's watching that it's uncomfortable finding new sellers at lows. It's only finding buyers, right? Unable to get traction. So going into the week, even if we see some pressure on into the open tonight, right, I would expect that as long as we don't get aggressive action back below these 151s, 150s, 151s, this will most likely continue to hold some kind of a bid tone, and slowly we'll try and mount this this retracement back up to more healthy levels, all the way back into that what is now effectively pretty much mid-range on this weekly, right? So a bit of a healthy move. Be very welcome to see some healthy action, right? Then, last but not least, what's going on Euro? Euro is just going to be a lot of wheeling and dealing with all these news, Greece, Ukraine, whatever, right? We'll have to see. Our assumption hasn't really changed. We talked about the fact that it looked like it was putting in some kind of structural bottom on that whole SMB fiasco, right? We consider the 2 days, the following days when FXTM started to, announce the troubles as one main event. Then what happened is we got the gap down on the Greek election result, and we said that's it. Now this is make or break, at least for this latest move. After the gap down, and we talked about this in the Sunday review, right? If we go through Monday morning and through the data release and we break below that level, or in any case we hold below those 112s, this is going to be very, very bearish, and we'd expect those 107s to come quick, okay? However, if we go through that data on Monday morning after the Greek election puke, if you want to call it for lack of a better word, and we can't hold below, then we would expect to just see some healthy profit making, some bit more healthy market moves coming in, and we'd be calling for those 114s initially, but then those 116s to attract, right? So what's happened? We got that gap down, and effectively, right, we retraced from those lows and into the just below the 111s, all the way back to 115.20s, right? And now we're just seeing pressure on. It looks like we're probably going to hold open down after the speech in Greece overnight. So probably see some pressure. But keep in mind that this is just a lot of wheeling and dealing, right? As the low has been set, and unless we get traction below that low, it's gonna be, it could just be healthy basing, right? So as long as we don't start to make our way and get daily closes back above the 116.50, or as long as we don't start to get a daily close back below that gap down low, just expect to see a lot of whippy action, a lot of headline risk driving this, but really it's just the market looking for direction, the way we look at it. So it's just, you just need to be a bit more patient, and those are going to be the pivotal levels. And it's going to be very tricky to try and trade tight inside that range because there's going to be a lot of what we like to call velocity of move inside range, and it doesn't necessarily mean a lot unless we trade or close outside those, okay? So I hope that was a decent outlook. Tried to cover as many things as possible, guys. I wish you an awesome rest of the weekend, wherever you may be, whatever you may be doing. An awesome week ahead. Thanks for listening. Have an awesome one. I'll see you guys on Twitter for London Open, okay? Take care, guys. Thanks for listening again. Bye-bye.